Bitcoin got you kind of feeling like, I don't know what's going on. I think I can help with that. Welcome back to Road Dog Crypto. Today we're taking a closer look at Bitcoin. We're first going to start out on the time frame of 4 hours, and then I'm going to go to the larger time frames, the monthly, the weekly, the daily, work my way back down to this 4-hour time frame. Timestamps will be available below if you want to cut to a specific spot. And then as also, I will have trade setups at the end of this video timestamped as well. Now, the last time we looked at Bitcoin, we identified this big, huge descending triangle pattern. There was technically a possible breakout going on, but it just lacked the volume. Looking at the most recent pattern, which is kind of a rising wedge or a rising channel type pattern, and we said, we need to break out above this point and flip it for support if we want to see prices go up to, say, the 22,000 area. And we also said that if it does not do that, we could expect more downward action, and most likely that it would follow this huge white trend line down to the lower areas. That's what we're seeing happen. But there's some other things that I want to take a closer look at today, other patterns that are within this pattern that could help us determine what to expect. So I'm going to flip over to a different chart. This one is on Coinbase, but the pattern I'm looking at, I drew it on Bitstamp chart, and I like to have a couple of charts up just so I can play with a couple of different ideas. I want to draw your attention to this diamond pattern that we have forming here. And this started forming back in about mid to late August, but these patterns are known to be bottom patterns. And I'm not trying to get you excited being a moon boy, because in just the right circumstances, they could be continuation patterns. It could drive us down. So we need to kind of pay attention to what's going on here. Now, this pattern shows up very well in the 4-hour. It doesn't show up as great on the daily. So we need to take that in consideration. One of the things about this pattern is that we've got basically a convergence of two channels. You have a channel that's going up and to the right this way. You have a channel that's going down and to the right this way. And this happens to be where they cross. This can lead us to a reversal, but it can also, depending on what side this breaks out of, lead to more continuation to the downside. When it comes to these patterns, I like to look for parallels in price action. So I have a trend line here that connects all the major touches. And if I move that over here, it lines up with my dotted line. Now, this does not have any top touches, so it's really not a strong indicator of a top for this pattern. But if I extend it out, then it makes a little bit more sense. We have more touches that kind of make it valid. And it's been following the inside of that. So it could be in play here. This could be what we're looking at. The parallelism is not as precise as I'd like. Whereas if you take this top trend line and bring it down here to the bottom, we have a good parallel structure there. Now, it looks like we've broken out of this pattern, but it depends on how you draw your trend lines. If you really want to confirm a breakout of that trend line, you need to bring it down to the wicks to extend it to its lowest possibilities, right? We haven't broken that. We've actually got 3 strong touches right there. We got to bounce off of that. That gives us some hope that we can get a bounce and pull out of this and break to the upside. Now, if this pattern does get a breakout to the upside, that's a very strong look that we will start making some upward momentum, because this one does have a nice measured move that would take us up back up to around the 24,000 area. We can draw that right here just to get a basic measured move, just right under 24,000. Because as you get used to charting and doing TA, when you get used to it, you don't have to draw out these trend lines as much. I do recommend that you do, but you will see it without having them actually drawn. You can see what's going on, and that will come in time. So in the immediate term, this is what I'm closely watching, because if it does break below here, let's go ahead and put a number on here. Now I'm on Bitstamp. Your chart might be different. There may be a different variation. If it breaks below 19,105 in that area, we possibly could be looking at some more downward action. What we want to see is a candle close, a 4-hour candle close and open below this line. And then it would be safe to say we can expect more downside. It might be an area to look to short for you traders that are trading leverage. And for any investors out there, I'm personally not selling any Bitcoin because this is a great accumulation zone. So I would look for prices to come down, and I would determine what levels that you would want to buy in if you're trying to stack or DCA your Bitcoin. However, it's not confirmed that we're going down, and we could actually wick down to this measured move area, about 18,800, 18,700, wick back into this pattern and still be golden to go up. We have to watch this very carefully. The clue is where a candle closes. So candle closes and opens there, more than likely we got more downside. If it wicks down and we come back up and close inside this pattern, we're still good. I'm quickly going to take you back over to the pattern site, Thomas Bukowski's site. And this is what we expect for a reversal pattern right here and breaking to the upside. If it breaks to the downside, we're looking at what we call a half staff pattern. And that's where we get a larger move to the downside. That's what we're focusing on right now with the smaller time frames. It is worth noting, however, that an upward breakout on this pattern occurs about 74% of the time. That's that's a greater probability that this will break to the upside than a falling wedge pattern. So this actually is a good bottom pattern. It's coming in at the right spot, but is it going to play out to a reversal, or is it going to pull off the half staff pattern? And that's the $64,000 question right there.
For those of you who hit that like button down below, I just want to say thank you. Thank you very much.
I'm going to go ahead and figure out a few targets here. I'm going to use a different tool you guys probably have not seen me use, and that's a trend-based fib extension, and I'm going to draw this from this bottom to this top, and unlike a regular Fibonacci where it would just give me a range right now, I get to add a third point, and I'm going to pull it down to this very low point right there. Now this is coming in at a Fibonacci of a -2.7. Those are my kind of oh crap targets, and so I like to mark those as possibilities of where we could come down should this pattern break and fail, and also this -618 right here. I'm also going to take a measure move from this pattern and put it right here at the breakout point and mark that. So should this pattern break to the downside, these are some possible areas where we could bounce from. And if you're shorting, these would be good targets to take profit. And if you are investing or DCAing, these may be some targets where you could put in your limit orders and get them filled. And the measure move that I have for this pattern, should it break to the downside, would be 14,597, just right under 14,600. The -618 Fibonacci for this move right here is 15,522 in that area. Remember, these numbers are just zones. You got a little bit of area above them, a little bit of area below them to play with. And then the -27, which is usually my oh crap target in these situations, would be 6,993, just right under 17,000. Of course, if we do any of these, we will be breaking below our all-time low for this cycle, which is coming in at 17,627 by this chart. If we go below that, we're starting to get into a different story here, okay? Couple of scenarios we can look at, but as far as upward action, it would be a while before we would get a good push to the upside. But don't panic, I'm not seeing those signs yet. At the moment, we are still good. There are some things on the larger time frames that we need to be aware of and take a look at. Before we get there, we're going to take a look at the indicators as they're playing out on the current 4 hours. 4-hour time frame should give us a couple of days of price action movement that we can kind of look at and anticipate. The first thing I always like to look at in situations like this is for divergences on the RSI, and we do have them. We see the RSI right here is going downward, and price action from that same point is actually going upward. Now this falls on this side of the pattern. This is hidden bullish divergence, meaning we can bottom and still go back up to the top of whatever pattern we're in, putting us around 20,600-700 right through there. That's a good sign. Hidden bullish divergence is a good sign, but it's nowhere near as strong as the regular bullish divergence, which we don't show right now. Now our RSI is coming in right now at about 29, which on the 4-hour, that's low. So that's a good thing. However, it did break below its trend line right here. So it could come on down even lower. It's a possibility. What we're hoping for is a bounce up of that. If we see it bounce up above 30, 31, then that's showing a more bullish activity, and that's what we want to see. So keep an eye on the RSI. MACD on the 4-hour is also taking a turn to the downside, indicating some more downward selling pressure going on. So I'm hoping that the histogram will not go down too far. The moving averages are definitely starting to come back down. So further downward action is expected. The question is this a fake out? Now, even as we speak, we've got a bounce from this bottom trend line, and that's a good thing in our favor. And we can possibly, like I said, get a break, and we'll come up above this line, hopefully break above this red line and break out to the upside. We got to keep an eye on that. What we have going in our favor right now is that the stochastic RSIs are resetting and the VWAP is starting to inch up. Those are two things that are in favor for price to go up. However, what we're seeing is a lot of sell pressure right here. Money flow is coming down, and we really need to see this start curving toward the upside to start feeling better about upward price movement. One other thing I want to point out is that price action is moving downward, and so is the volume. Now, if you look at the volume cheat sheet, when that happens, that means that this trend is actually weakening. And with these big long wicks on these candles, that's giving me some more confidence that we'll get a bounce around these lower price areas, around 19,135, somewhere through there. But somewhere around 19,000, we may get a bounce to the upside, so let's keep an eye on that. Again, what we do not want to see is a candle close and open below 19,100. If we see a full candle form in there, expect more downside. Now, if we look at the EMAs, we got the 100, that's the white line, crossing over the blue. Now, these are lagging indicators, so it indicates more of this movement right here. It's just catching up with that. So I wouldn't put too much weight, but like I said, it all depends on where the candles open and close as to how much weight this actually has. This can swing back up if we get a movement to the upside. What we don't want to see is this yellow line cross a white line. that would not be good. But typically with your moving averages, you will see price action come back to retest them. We'll be looking to get over this green one, which is a 9 moving average for the 4-hour chart. And we'll also look at getting above this red one, which should probably follow this white line. So if we break above the 21 moving average, things should be looking better for us. And with the Ichimoku cloud leveling out here and thickening, that's also another sign that this trend is kind of weakening. And I've just taken the measured move from this pattern and I've applied it to a breakout to the upside, put that up here. Now, if we break out to the upside, we are just going right under 24,000 as our target for that. And it doesn't mean that it'll go up quickly, but in general, when these patterns break to the upside, they go up just below the top pattern that they were up here. And that is according to Thomas Bukowski on the pattern side, if you want to verify that. But this is the actual move taking us up to right 23,922 on the Bitstamp chart. And for you guys looking for a trade setup, I've got them all marked right here. I've got all the possible buy targets where you can put in your DCA orders, things like that. If you're shorting, these are take profit areas. Then I've got your take profit or your sell targets right up here in the red. So buy in the green, sell in the red if you're trading. And again, if you're looking for points to DCA, these are some good numbers to keep in mind if prices hit that low to buy just a little bit more Bitcoin. Now I'm on the Coinbase chart. I'm on the monthly chart, and let's look at what's going on here. We got price action coming down over the monthly, volume coming down on the monthly. That means that this trend is weakening for sell pressure overall on the monthly charts. At the current moment, and we still are within the first 10 days of the month, our current price has dipped below the last low that we had last month. So that doesn't look great now, but remember, as price goes back up, this could just be a wick, and it just depends on where the candle closes around the 31st, right? So we want to see a candle close on the monthly at this level, or about 20,100 or above 20,100 to confirm that we still have some more positive action coming over the next few months with Bitcoin. Now I had to switch over to the Brave New Liquid Coin Index for Bitcoin just to get the past history that we need so I can take a look at our monthly indicators. Now our RSI is coming in at 40 at the moment. We need to get above 50 for this to turn bullish. We'll also point out that our RSI is going down and our price action from these points are actually going up. Now that is hidden bullish divergence, meaning that price should come down to a low and then bounce and go back and continue the overall trend on the monthly. Good sign. One other indicator I want to point out on the monthly that gives us some hope is this Ichimoku cloud with that green string right here. See, it's not thick, it's very thin. Now, when you see the thin ones, that means movement for that area. So according to this, we should actually get a bounce up. So overall, you could expect something to come up through here and then come down through the cloud. But this is long going down the road. We're talking about well into next year before we start talking about this. So let's not get too far ahead of ourselves. Also on the monthly, you notice that the histogram, we actually stayed at the same levels there. And now we're starting to turn up on our histogram. Should be seeing some curving on these moving averages right here. So they should start to turn around and eventually cross over, but we're not near a cross yet. We're leveling out. All right, now I'm on the weekly chart, and this one's on Coinbase, and mostly just looking at our indicators here. Now, the weekly does show that we got that breakout above this trend line right here. If we just go ahead and back out of this, that huge falling wedge, or the breakout is official above it. We just don't have the volume behind it to see the move up that we need to see, which means that it's going to retest the area that it broke out of, which it are, or retest this trend line, and it could actually come all the way back down to retest our recent low at 17,600, that we could actually be retesting this actual bottom here. We could get a lower drop, possibly, if we do not get a bounce off of this white trend line. The Ichimoku indicator is staying level up here, and the top part's coming in about 43,000, and the bottom part is still going down, but as long as this is staying nice and thick and we don't see this part coming down or it thinning out, good sign. Now RSI, we're dipping below, may possibly come back down and reset. However, our VWAP on the weekly is still in the plus range. Money flow is coming down. There is a lot of sell pressure. Now, who's selling? That's the big question, and that's one thing that I want to address today. Who is selling all this Bitcoin so close to the bottom? Doesn't make sense, does it? Because we see more and more banks talking about developing their infrastructure. They're coming into it. So who's selling? Well, the institution and the banks are. We had our all-time high right around $20,000 of Bitcoin. That sets the new floor price for the next cycle. That's the area that we're holding right now, which is a good sign. So basically, in an institutional mind, this will be the floor price. And this will be the price that they try to get it back to. They missed the boat right here. Now, we had Michael Saylor buying in. We had Elon Musk buying in with Tesla right around these areas, around 20,000, 21,000. That created FOMO in the institution minds, and they started buying in right through up through here, pushing the price up. The institutions that got in this late were buying from 22,000 on up to around 35,000. Here's your sellers and the shorters. So here's part of the problem. When the stock market gets scared, they're going to sell their most liquid asset, gold being one, Bitcoin being the other, and we saw the huge FOMO that drove us down to 17,500. So a lot of these guys have gotten out, but all this infrastructure, everything is getting set up. We know that this is going to be the future. We know, regardless of what they're saying, they are making preparations to set Bitcoin and blockchain up for the new market. And probably the biggest news in my mind is when BlackRock got in on this, because, when they get their fingers in it, something big is going to happen. So my opinion and what I see going on fundamentally, this is my speculation, and it plays in with the Wyckoff distribution theory, which would have a level up here, which is basically a range that they want to trade in. If we identify this range right here, what you can expect them to do, drive prices down so that they can get their entries in right at here at $20,000 or below. And in their mind, Bitcoin under $20,000 is a steal. And that's why you see so much buy pressure coming in when we start getting down to these low $19,000 areas and $18,000 areas. The buyers are coming in and pushing that price back up. We have not been able to break that 17.5. We haven't even been able to get right down close to it. We may test that here soon, though. And if the big money is taking all this trouble to get their positions in order, they've got something big planned for it. We should probably do that too as investors. Trading's a little bit of a different story, but for investing and getting our claws into this so that when the price does go back up to these higher levels, we're in good positions, just like they are. Now, one thing that they do like to do when they do their accumulation, and at some point after boring the market to tears at bottom, there is usually what they call a spring, and that may possibly go below the 17,500 area. This is usually a quick move that goes down and below and then starts coming up. When that happens, that's the sign of a major move coming, according to the Wyckoff Theory. Now, it doesn't just shoot straight up. It takes a little while. It's got a method to its madness, but it will be working its way back up here to around the all-time highs at 65, 69,000 should that scenario play out. This is something that could play out over months, and we're talking on into next year. If you're wanting my overall look on what's going on with Bitcoin, that's it. The big money is positioning itself, regardless of what you hear about regulation and everything. The players behind the scenes are going to make this work out in their favor. All the big players are here, and a lot of them fall into that same category as you will own nothing and you'll be happy too. I'm not excited to just warm-heartedly welcome them. They've got their own agenda, but they are in the game. And we got to acknowledge the way that they play their games, because used to, we didn't have to worry about what Wall Street thought in crypto. We didn't even used to trade with stable coins. We used to trade just Bitcoin to pairs. But now, since we got Ethereum in here, which Ethereum is going to be one to keep your eye on too, because they play a big part in this. Now we got DeFi. Now we got stable coins. We've opened up how we trade. We changed the way we trade. Now we trade mostly in US dollar terms. Personally, I'm still in the camp that we reached our bottom on June, 13th? And lots of things do suggest that, but the smart investor and the smart traders always expect prices to go down even further than what they anticipate. That's a mindset that's good to keep. All right, and the last time frame we're going to look at is the daily. The one thing on the daily that is kind of making me a little antsy is this Ichimoku cloud on the daily. It's suggesting that we got more downside. See, we're really thick here, but notice that this is coming down, and look how thin this is getting. That means downside action, and this is on the daily. So I do fully expect us to at least come back down probably to around 18,800. Now, it could just be a wick to there, or we could be candle closing under here. And like I said, candle closes under here mean more downward action. If there is a candle close under this white line, then I'll expect us fully to come back down and touch our lower trend line here, which was our previous bottom. And this could be the finalization of an official double bottom. And we could get a break to the upside, or in worst case scenario, the whole world falls apart and we start going to the downside. That is what we want to look out for. Tracing this trend line all the way back down to 17,600. It's a possibility. So you might want to prepare for that. And that could be if you're trading to short, make an excellent short, or if you're DCAing trying to get in, this is going to be a great area to put some limit orders in. And I'm definitely going to do that. And if you ask me, well, what if it goes to 10,000? Okay, well, halfway from where we are right now. If it came down to 17.5, what is that, another $6,000 or $7,000 down? Big deal. We will make that up. My strategy is to keep buying. I would love for it to hit 10,000. I don't want it to, but if it does, I'm soaking up everything that I can in Bitcoin and Ethereum. So just know that if we cannot hold this level where we are right now, around 19,000, and move to the upside and start breaking up through this cloud, but if we do not, there will be more downward action that will probably take us back down to 17,600. And I will be buying like crazy. So the daily indicators, we got the stochastics RSI coming back down, currently at 40. We're looking for it to get back down to the 0 point if possible. That would be the reset. Money flow is stacked coming down. VWAP is kind of looking like it could possibly round off. So as stochastics start coming back down and resetting, VWAP should be coming back up, and money flow hopefully will be kind of leveling out and coming back up. And that would be a good sign for us to go to the upside. There is some hidden bullish divergence that's trying to form as that goes lower, but it's not there yet, and it's not as strong as what we need to get a solid move up. MACD on the daily is showing some downside. There's a possibility this could level out and curve up, but it could also cross. If we see a cross, more downward action. It's got a good chance to actually level out, is what I see. Doesn't mean they'll totally play out that way. If we do get a larger histogram coming down the downside, for instance, if this histogram actually comes down and makes a lower one like that, then we can expect more downside on the daily for Bitcoin. So guys, in a nutshell, we are showing some signs of going back downward. I would not be surprised if this is a time that we retest our bottom of 17,600. Again, it all depends on this trend line right here. And if we extend that to the outside, if price gets down below 18,900, we start breaking below the $19,000 area, again, close below there, expect that will more than likely happen, retesting 17,600. If we do happen to stay within this, then we still have a shot to actually come up to higher levels, up to around 20,500. If we break above that, hold that level, we have a shot to actually make it up to higher levels than that. So at the moment, all depends right here on this bottom trend line connecting these wicks here on the daily as to whether we'll go up. We do have buying pressure. These wicks that are pushing the candle closes up above this area are indicating that we do have buying pressure that might push us back up to the top of these levels of 20,500. Price action is coming down. Volume overall is also coming down, meaning that this trend is weakening just like the wicks are showing. So I would not panic. I would just watch cautiously and plan accordingly. Until next time, my name is Lane, your crypto road dog, reminding you that you are blessed to be here in crypto at this time. I can't think of a better time to be in. You guys are the hardcore people that believe in Bitcoin and want to change your lives. This is the greatest wealth building opportunity that we have in our lifetimes, and I'm embracing it. And I hope that you do too. And until next time, just remember, you got this, baby. You got it.
If you just stumble across the channel, it's probably because somebody hit that like button before. And for those of you who hit that like button, comment, and subscribe, I just want to say thank you. Thank you very much. Well, it's all right now because anything you do, oh, baby, that's all right. Oh, baby, that's all right.